Welcome to another Market Matters weekly video. I'm Nicholas Forsyth, Director at Market Matters. To everyone that came along to the event last week, thanks for coming along. Today, we've got a few points to cover. I'm going to talk about them right now. Firstly, we're going to talk about the index, where to from here. Also going to touch on the banking space, given we've got a decent exposure to the banking space. Then going to touch on the miners. Also, we're going to talk about gold, given the yellow metal's been rallying pretty hard recently. And lastly, we'll just touch on VOC. Obviously, there was a bid put in for VOC this morning, and it's having a good day in the market today. So, James, let's kick it off with the index. Firstly, around that sort of 5,650 or something around that level at the moment. Where to from here? Are we going lower or higher?
Yeah, probably lower, given the seasonality we see typically in June. Going into May, just to take a step back, going into May, we had high cash levels. May, June is a seasonally weak period for the market. We went in there with high cash levels. We've subsequently gone and spent some of that cash. Yep. Right now, we're sitting on 10% cash, looking to invest the rest of that as opportunities arise. We wrote about index levels in the market this morning, so you need to be conscious of index levels when you're buying. Sort of 55.50 is probably the place to start, and if it gets as low as 54.50, then we'd be fully invested at that level. I think the important thing is we don't think this is the start of a major correction. We are calling a major correction at some point down the track. We don't think this is the start of it, largely because the positioning of the market. Cash levels are high, caution is at really high levels as well. So fundamentals are cautious here, and major tops don't come in when caution is high and cash levels are high. So use this weakness as a buying opportunity.
Okay, next banks. We bought CBA under 80 after selling it at 87, picked pretty much the top. Moved back in around that 80 mark, added to it around 79. It's since gone a little bit lower, not a lot. Firstly, sort of our view on the banks in general. We've also touched on Westpac in the weekend report, saying if the market goes to 5-6, we'll add to it there. Has that evolved or changed somewhat, given the market has sort of taken another move downwards this week?
No, we'll add to Westpac. We'll put another 2.5% in that stock if we see lower levels for the index overall in the towards the back end of June. What typically happens is the market does, it does bottom out towards the back end of June. Obviously, tax loss selling and the like comes into play. Often you see the last few days or last week of June being the low point, and then July is the really seasonally strong period for the market. So keep that in context. If you think about CBA, it's down from it's down about 11 or a bit over 11% from its highs. Heaps of factors playing into that, but one of the things we've been speaking about recently is the changing mood around bonds and bond yields. Bond yields have gone lower, which has put pressure on bank earnings.
Yeah, net interest margins.
Exactly right. They've had a whole box and dice thrown at them elsewhere from government, etc. But that's probably one of the things that we've seen. Yesterday, the market was off 80 points. Banks accounted for 20 index points of that decline, which is low relative to their index weighting. So, for me, I think the bulk of the selling has now played out in the banks, and that's why we've got a more positive stance on them. So we haven't gone in and put everything on the nose after selling them at the start of May. We've slowly accumulated. We're still in an underweight position in the banks at the moment. So, and we'll add to it if Westpac comes back a little bit further. So look, use this, as I said before, weakness buying opportunity, particularly where we are at the moment.
Okay, the next one is the miners. Bought a little bit of Fortescue on Thursday last week. Got in there at a nice sort of 465, 466 price. You talked at the seminar, or at the event we ran at the Four Seasons about, potentially there's 20% in that, and had a really good couple of days. It's since sort of drifted back with the market. We're still net up on that. We also have positions in Rio Tinto and BHP. Rio, we're sitting on a little bit of a profit. BHP is probably a tiny bit underwater, but they have all three of these positions have shown profits. Were showing profits not that long ago. Just our view on those. Iron ore currently at sort of 56, and a bit going on with the oil price with what's happening in the Middle East. Would we be happy to add to them here, or just sort of hold?
Yeah, we're going to hold them for now. We've got about 20% of the portfolio in mining stocks, which is big for us. So typically we have reasonably low weightings in that area of the market. But we think there's a good trade here. So, if you use, I think the clearest observation in the last week or so is oil is energy exposure, I should say, has been weak. So BHP's underperformed the likes of Rio and Fortescue. So that's the first observation. I think that's probably likely to continue. Looking at what oil's doing, there's just no signs to go in there and buy oil stocks. And I wrote about it in the afternoon report yesterday. The likes of Origin, Santos, etc., Woodside even, they look like shorts to me in this type of environment. So less positive on BHP, more positive on Rio and Fortescue. Fortescue, you made mention of when we bought it. It was, it had come back a long way. And we think there's a 20% bounce in Fortescue. One of the things that really got me encouraged by that move, we had a weak Chinese PMI data out a short time after we bought that position, yet the stock stayed reasonably well supported. When stocks stay reasonably well supported on weak news that should sell them off, it means that selling pressure is sort of evaporating. I think we're sort of there with the banks as well now. I think it's a similar theme that we're seeing start to play out in the banks, but it was obvious in Fortescue. So, look, I'm still confident in that position.
Okay, and then next, just want to touch on gold. A lot of forecasts around the market in the last couple of days saying gold's going to 1,400 this year. We erred on the side of caution and pulled our Regis bid. Didn't quite get to that price. Bear in mind we did make 20% on Regis, or close to 20% on Regis and Evolution only a few months ago. Currently hold Newcrest. Gold's at about $12.90, had a really good run, looking like it's sort of going up towards that $1,300 level. Just wanted to get our updated perspective on that. We also do have a little bit of Oz Minerals in the portfolio. It does have a small gold component to it as well. But just our thoughts on gold currently for people out there holding.
Okay, so last night it hit a 6-month high, obviously very strong in gold. This week is really going to be key for gold. So in the last little while, it's been buoyed by a weakening US dollar, which is obviously positive for gold. It's also been buoyed for in terms of macro risk factors. So the ECB out this week, UK election this week. So if both of those things, I wouldn't be adding to gold right now. It's had a good run. If both of those things, the outcomes are what the market's anticipating, gold will probably be sold off. So for mine, gold's a hold at the moment, not a buy, but not a sell just yet.
And lastly, we've only got 20 odd seconds left, but just want to finish on Focus. We've seen a takeover bid by KKR this morning on market. We sold it at 380, so it's still comfortably below where we sold it. Any thoughts out on it currently for investors who may not have taken the sell order and sold it when we did?
Yeah, so there's probably going to be a competitive auction process. So 350 is the first bid. There's other people sniffing around in it. So for mine, I'd probably hold it if I was holding it right now. It's a conditional takeover offer. So it's going to be a hard one to call, but I think there'll be another bid. There's likely to be another bid, in my view.
Fantastic. Thanks for the update, James. Thanks everyone for watching. As always, any questions, feel free to reply to this email. Give us a call on 1300 301 868.